What is happening, everybody? I'm Sean McLaughlin. That's Steve Straza. This is the Flow Show. Straza, how was your weekend, buddy?
It was quiet. It was nice. How was yours?
The opposite of quiet. I threw a 50th surprise birthday party for my wife on Saturday night.
Oh, was she surprised?
Oh yeah. We had the whole town come out, man. It was a thunderous surprise when she entered the room. It was something.
Good for you. That's awesome.
Yeah,
Did
yeah.
you rent a bouncy house?
Yeah, we had the bouncy house, the foam pit, all that.
Awesome.
Yeah. No.
Awesome.
Anyway, okay. So this is the Flow Show. This is the show where me and Straza kind of get into showing you guys how the sausage is made here at All Star Charts. Straza and I do this regularly. We get on the horn. We talk through some ideas of some trades we want to put on. He wants to do usually trade equities. I want to trade the options. We bounce ideas back and forth. And long ago, we figured out, hey man, maybe we should share one of these calls with the audience because you guys might get something learning from seeing us work through our process. So this is a completely unscripted show. We don't know what we're going to talk about. Straz is going to throw some ideas out there. We're going to debate them, look at the merits of trading options in them, and see where that leads us. Sometimes magic happens. Sometimes it doesn't.
I'm into it. Hey,
Yeah,
you seem to have thoughts on this VIX.
I do have thoughts on this VIX.
Talk to me.
You got a VIX chart? You got one up there for me?
I do.
There you go. Okay, so you know, the VIX is not like sending any alarm bells out right now. Like it's not like issuing a red alert by any means, but if you zoom in, which you have done there, if you look at like the last 8 weeks, it's been choppy, but it's been grinding quietly, slowly higher. Again, not sounding any red alarms here, but it's telling me as an options trader that if we keep inching higher the way we are right now, that portends to me that we might be heading into some volatile trading action, maybe some sideways sloppy trading action. And when options premiums are starting to get a little bit more elevated like they are now as the VIX is showing, that tends to favor putting on delta neutral credit spreads in the options markets. I like to do it with ETFs, preferably sometimes a big cap stock. We did Tesla recently. It didn't work out, but hey, but that's kind of where my head's at right now, Straza. People who follow me know that last week we put a few bearish trades on the books. We haven't had a lot of bearish trades in a while. And we even put some bearish index option trades on in the S&P and the QQQs on Friday afternoon. But I don't know. I feel like I kind of want to bolster that position. I still have a lot of long exposure out there, and I know you do too, which, they're hanging in there for now. But if the market gets a little choppy, a little sideways, I want to have some other things going on in my portfolio that could potentially smooth out the returns. And so some delta neutral credit spreads are where my head's at. How does that jive with what you're thinking?
I have a compromise for you. I'm not
Okay.
I'm
All
not
right.
bearish at all. I don't want short exposure right here, right now. Market just looks really good. Semiconductors keep ripping. Offensive groups are doing okay. Banks financials giving a little bit back, but hanging in there. I like the sideways idea. I also like quality or more defensive names. Didn't we do a thing? So I have a whole thing that I'll walk you through and you tell me if you like it. I got
Okay,
a
great.
whole plan for this. But didn't we do a setup before? I think it's a bit unique. I know you don't do it often. You have multiple legs of the option strategy, and you're basically betting on sideways at first, but you're opening yourself up to in case like the range resolves higher, then you could take off the sideways leg and open it up to a directional bias.
Yes.
What is that called? Does that have a
That's
name?
called a calendar spread, a call calendar spread. So
Call calendar.
without getting too deep in the weeds, what I like to do with call calendar spreads in a situation where Straz is laying out is you sell first of all, you start the strikes a little bit above the market. So if a stock's trading at say $50, you look at the 55 strike and you sell a nearer term call. Let's say we're in February now. So let's say you sell an April call and then you buy a later call, maybe
Yes.
let's say July or August,
Right.
And you hope the short call just expires worthless and goes away. Then you're left with the long call for longer exposure.
So ideally, in a perfect world for that setup, right, where you have the April call that you're selling, you go sideways for 2 months into April, ideally, take that one off, and then you just have the long calls into whenever you got months left of that
Yeah,
trade.
and it gives you a lot of flexibility too, right? If you do a calendar spread where, again, let's use the months we're talking about. If we sell an April call and buy a July call, when April comes and goes, and if those calls expire worthless, you could just let it expire worthless and then just hang with that July call.
Right.
Or you could
Another
roll that short April call into May. You could do it again into June, into July, bringing in more credits.
until that range resolves, then cover that and leave the long call.
Exactly. I mean, it gives you a lot of flexibility, and it's very discretionary in that way, which makes some people nervous. But yeah, I like those trades. I don't do them a whole lot, but
Right.
when the situation is right, I like them.
I like it for now because it opens us up, right, to the possibility where this range does resolve. I think this is perfect, but I want to hear from you. You're the options expert. Healthcare. Let me walk you through just what I'm seeing in the charts. You tell me if this kind of strategy makes sense. Okay. Here's XLV. This is a weekly, right? Healthcare over the trailing month, the trailing quarter, on a year-to-date basis, which is about 2 months, the leader outside of technology. So over all those time frames, healthcare is the second strongest group. Tech has been, again, really hard to beat, right? This year, this quarter, whatever. Here's large cap healthcare, XLV. Look at where we are, right? This massive range, right at the upper bounds. I don't think we break through right now. Why? Simply because this is a weekly. This thing off of the October lows pretty much only had 2 down weeks, right? So I think it's due to cool off. It's due for a little digestion of these gains. But afterwards, I would expect an upside resolution in the direction of the underlying trend off the 2020 lows. Also, an environment where we're starting to maybe worry a little bit about these bearish developments that we're seeing. I think healthcare gives you a bit of that defensive tilt, right? We talk about how if we enter a more corrective mode here, things like staples should outperform, and that's a concern. Things like healthcare should also outperform. Here is XLV relative to the broader market coming right off of its lows from late 2021, right? So indicating to us maybe it's due for some leadership at the same time that the absolute trend is knocking on the door of this multi-year range resolution. So I think there are more ideal vehicles than the index itself. Let's look at AbbVie, similar structure, right? And again, just speaking to the relentless bid for healthcare stocks, AbbVie's been up. This is a record, 9 straight weeks. And
Ooh.
if you ignore this down 20 basis points week, 2 weeks ago, it's been up like 12 straight weeks. So just the stock's never done that before. Speaks to the underlying strength, but also speaks to maybe some digestion and consolidation over the near term, right? So AbbVie in this range, similar to XLV, we think it eventually breaks out. However, we think sideways for now is probably the better bet. How did I do?
You did great. And while you were talking through XLV, I kind of mocked up a trade here. Gene, if you
Awesome.
want to flip to my chart here real quick, or my screen, I've put together a P&L graph of what a calendar spread in XLV could look like. This is just one idea. So I chose the 145 call spread or call strike. So with XLV trading at 142 and change,
Hmm.
no, 145 seems like a good place that we could, see it get to if it follows through on the upside over the next, few weeks.
Hmm.
And one thing we didn't talk about, Straza, with the calendar spread is there's actually two very big reasons why I like calendar spreads is that I have two ways to win. We already talked about the first way, right? Like we put the calendar spread on the nearer term options, in this case the March options would expire away worthless, and now we're left holding the longer term calls at a reduced cost, right?
Hmm.
And then if the thing rips higher, great, we've got the potential for unlimited gains, just like any long call trade. The other way we win is if the underlying trades up to our strikes before our short calls expire, we're not going to make as much money, but we're still into the tent, right? So here, if you look at this tent here, this is where we're trading right now. As you can see, this purple line kind of shows you the P&L graph across a range of prices for today. The
Hmm.
blue line shows the P&L graph at expiration day. So in this case,
Right.
expiration of the March option. So by the way, I put together a March-September calendar spread. Okay, so
Right.
short the March options, long the September options. It would cost us, if you see here on my bottom of my screen, it would cost us about 487 to put that trade on. Which,
Not bad. It's $140 stock.
right, it's not bad. And so if XLV trades up to 145 before our March calls expire, you could see, we start to make a little bit of money here, but this is just today. One of the cool things about this platform here is I could kind of fast forward in time. These are all hypothetical, but you see down here, I'm kind of fast forwarding the date. And as I get, further along in time, you'll see that purple line is morphing higher, right?
Yeah.
So the later in the expiration cycle that we get to that 145 strike, the more profit potential we have.
Yep.
Now you'll notice once we get above our strike 145, which is right here, we get on the back side of this P&L curve, which is what we don't want to be. So when you have a call calendar spread on and you get to your strikes, if you still have the short option on, at least this is the way I like to do it. If we get to my strike, I'll just take the trade off, book the gain, whatever it is. Hopefully it's a nice gain. Sometimes it's not if it happened really quick.
Yeah.
But either way, it's very likely I'm winning. And, hey, I'm getting paid even when I was technically wrong, Straza, right? Like we're
Right.
putting this trade on because we think it's going to take its time to break out. But if we're wrong on the timing, we could still make money, just not as much.
So that's probably a smaller gain. But what this P&L graph is not showing is the upside potential for if and when you do take that first leg off, right? And then
Right.
it
If
carries on. This could be a lot bigger winner than what this is showing.
Absolutely. If we get to March, so in this case, March 15th is the expiration day for March options. If we get to March 15th and XLV is not traded up to 145 yet, so we haven't done anything with the position, and those calls expire worthless. Let's say XLV is trading at, I don't know, 143, right? 143 and a half. Those 145 March calls will expire worthless. Then we're just
Cover
sitting in a
call.
regular old long call trade, the September options, with the potential for unlimited gains,
I really
like
like it.
any other long call trade. We just got them for a cheaper price, right? Because right now, look, if we put this trade on right now, it's going to cost us about 487. But if I go into the if I were just to buy the September options, just outright, right here, you can see in
Wow.
my chart, they're going to cost me about 625. So I'm getting them at a discount. That's one way of thinking about it, right? We're getting them at a discount by doing the calendar spread.
Not only are you getting them at a discount, but I mean, look back to mine, XLV, bearish momentum divergence, the upper bounds of its range. What a run it's had, right? It needs to digest. So sideways for a month, month and a half until what, March 15th. Then you get a breakout. I think I love this. And now talk to me about the preferred vehicle. You would rather do the spider or you'd rather do an individual stock or what?
Um, I mean, I think you showed me that AbbVie. I don't hate the AbbVie. I think AbbVie might be a good vehicle too. I think I like the XLV better because in the case that we're wrong on the speed of the ascent, right?
Abby might be too good of a vehicle for this.
Exactly. AbbVie might really rip. It has potential, right? It's one of those
100%.
stocks that if it gets ahead of steam, it could really rip. Whereas the XLV will kind of, it'll break out, but it's not going to rip 20% in a week. It just doesn't happen. But AbbVie could.
So and here look, and here's AbbVie too. This is the kind of relative chart. This is AbbVie relative to equal weight healthcare. This is the kind of relative chart I want to see in a name that we're making a pure directional bet on, right? Like maybe it's too good if AbbVie breaks out of that range. There's probably a better chance that individual components break out of their ranges before the index. The index has a better chance of giving us some sideways first, then getting that resolution, which is really the ideal way for this to play out. So I'm with you on that for sure. AbbVie almost looks too good for
Hey,
this.
quick little diversions. I was just checking the chat stream here, and I got some work to do for Joe because apparently me and you are his second favorite pairing of shows on our network. He likes you and Pat better than you and me.
I'm
So
offended.
so Joe, I got some work to do, buddy. I'll work on it. I mean, maybe look, I get it. Pat's better looking than me. I get it. He's much better looking than me.
I wouldn't give him all that credit. Listen, here's what people like about me and Pat, Sean. That is the people's show, Chart Request Live. So maybe one day we come on here and we open it straight up to the chat. And instead of us coming on and crafting our own idea, right, and we're driving, we take chat requests and try to make something of their setups,
I like that. We could do
right?
that.
That would be fun.
Gene, you listening? We might do this next week. Just budget some extra times. We'll go long. All right. Yeah, dude. I like this trade a lot. I like it. The other reason I like it currently in this environment right now is because, unlike you, I think you're still bullish. I'm a little bit hesitant to be aggressively bullish here in this market. I'm still not going to shy away from great setups to get long, right? But this kind of trade speaks to me. Doing this little calendar spread here, it's not overly aggressive. If we're wrong, or at least if I'm wrong, and the market does want to scream higher and take all the stocks with it, this one will definitely go. And I'll have an opportunity to get out. Maybe I have to take the whole spread off before March expiration, which is fine. I could still profit.
This gives us options, right? An environment where we're a little bit unsure, we feel a little tactically bearish. Maybe that bearishness just plays out in a sideways manner and then resolves and we go. This leaves us open to winning in that environment too. And I really like that about it.
Yeah. All right. Hey, this is great. I came into the show thinking we're going to sell a strangle on something, which is great. But you threw me a curveball and I like this. This is a good trade. I'm going to put this one on. I like this.
I had a feeling we could find a great compromise here with this.
And guys, as I said at the top of the show, this is how it goes here at All Star Charts. Me and Straza and JC, we call each other, we talk on Slack, we hack out ideas, and this is how it's done. It's not always pretty, but this is how we do it.
No, this was a fun episode. Glad we did this.
Trading, hey, look, if you're doing it right, trading is a team sport. All right. I know there's a lot of people trading attracts a lot of people who are go it alone types. I've been that type before. Everyone wants to do it themselves. That's fine. That's great. But you know what? We all work better as a team. However you put your team together, whether it's coworkers or you just have a circle of trader friends that you get together with on a regular basis and hack out ideas. I mean, I'm telling you, trading works better as a team sport.
And we got an all-star team over here, so we're very lucky.
Hey, I like how you did that. We have an all-star team here at All Star Charts. All right, Straza, I feel like we did some good here. You got anything else? You got any other curveballs you want to throw out there, or should we just pull it?
That's really it. I mean, everybody on the internet, get ready for the failed breakout heard all around the Twitter because the S&P rolls over here. This is the chart that you're going to see, all week. They're going to mark it up just like this. Yeah.
I do love that you and JC seem to be polar opposites right now. JC's, kind of chirping from the bearish camp all of a sudden. It's got a lot of people confused on Twitter, I've noticed. A lot of people very confused that JC's putting on bearish trades here. But you're still holding out for the bull camp. I like it. I'm in the middle, which is probably right. That's the way it should be. I'm in the middle for you guys.
Listen, he keeps us on our toes. He keeps things exciting around here. So we've been having fun about it.
Right on. All right, everybody. Thanks for tuning in. Thanks for doing the chat. And as Straza said, I think next week we'll have to talk about timing and whatnot. But I think maybe next week we'll do a little take your little request show.
Yeah, let us know in the chat, guys, if that's something you would like and you're down for, and we'll figure it out. We'll get it done.
Yeah, I like it. We got to do more things that involve our community, right? We got to get them more involved. That's a great idea.
100%.
All right. Okay, everybody. Thanks for tuning in. He's Steve Straza. At @Straza on Twitter. I'm I'm not Chicago Sean anymore. I'm Options Sean. I forgot I changed my Twitter handle a while back. I'm still not used to it, but whatever. I'm Options Sean on Twitter. Tune in, follow us, and we'll do this again next week, next Monday. So we'll see you then. Take care, everybody.
Happy Monday.